Alrighty, well, good morning, my friends. It is Tuesday, March 4th, 2025. No more February. I want to look at something that happened yesterday and talk about following a trade plan. Um, we did talk about when we came into the open yesterday how we were sitting right in between two major signals. And when we came into the open, we were sitting right here at 59.95. That right there, my friends, was 50% of the range of the whole back and forth we've been in for the last 2 or 3 months. So if we zoom all the way out, we go up to, I might as well just go up to the daily here. Ever since we made that all-time high and we printed a whole bunch of bearish signals, I'm talking monthly signals, quarterly signals, weekly signals, daily signals for the bears. Everything lined up from there, and that was our last major swing high, the all-time high on the S&P 500 futures market. Well, we then sold off, and then every time we came into these major lows, somewhere right around 5,800 here, 5,850, the bulls would come back in, and we started to get a whole bunch of bullish, strong bullish signals from this low, and look what happened. We even pulled back right to the 38 retrace of this bullish leg that we were pushing in over here and bounced. So it was very bullish from that point. We're defending the 38 retrace. We had weekly bullish signals down here. This was the one time where the daily time frame did not print a bullish signal, but every other time frame below it and above it did. And so we then pushed. And then as you can see here, for multiple months, everyone's aware of it. We've been kind of getting really strong from the lows and coming all the way back to the top of the range, and then getting very weak up here. And we were talking about how we were sitting as we came into the open yesterday. You can see there's that daily candle all the way on the right-hand side of the screen right here. You can even just zoom it in now. We were sitting right up here, and that big thick line right there is 50% of the range from the all-time high down to that major swing low area over here, right? And that was the last major swing low from 58.09. So from 61.81 something down to 58.09, that was the range that we kept kind of parrying back and forth inside of. 50% of that was right there at 59.95. And when we came into the open yesterday, that's exactly where we were. There's the line right there. That's 59.95. And I told you guys specifically in the Excel news report, as the last bullet point of our news report, it said that if we can get above 59.95, that was a clue for the bullish side. And if we could not get through 59.95, that would lend itself well to our bearish perspective. So let's just take a look at how the cookie crumbled here yesterday. The market pushed right to 59.95, basically the high of the regular trading hours. And then we just began a beautiful sell-off. So again, we opened, we came into the open and we said, basically, it could go either way here. But if we stay below 95, that was a good clue for the bears. If they could pop through 95, which notice they did in the pre-market and pulled back, if they could get through 95 to the upside, we were then going to be bulls for potentially higher prices, understanding that each roadmap level could be the next major swing high. As you can see here, not cherry picking anything. The swing high in the overnight session right to 85. Then we pull back, we bounce, and come back up, and then basically fell at 6,002, our next roadmap level. So again, we break out. You never know if they're going to come right into a roadmap level, and that becomes the next pullback area. But if we could get through 95, it was a good case for looking for longs, at least up into these areas. So the market opened, and all we did was sell off from there. Okay, now there was a point, maybe an hour after the open, after that nice healthy sell-off, where it went sideways for a bit. We did have kind of a back and forth market, but then eventually, as you can see here, the overarching thing you should have noticed, every time the bulls tried to bring price back, they couldn't even get through VWAP, right? It would kind of push into VWAP, pull back, push into VWAP, pull back, push into VWAP. And then finally here, eventually, As we got out of the lunch hour there, they held and they held, and then bam, the next push to lower lows. Right, so let's look at some of the details here. We don't have a whole lot of time. I did start late here, but I do want to just go through some opportunities you could have taken on that short side, right? So again, we held 95, the first condition for the bearish perspective, and we sold off from there. So probably the most aggressive thing you could have done if you recognized that we were rejecting, and look at that huge bearish divergence as we were testing up into 95. The first most aggressive thing that would have made sense to do would have been short the back end of this FMA as we sold off. There was a very clear divergence. So let's zoom in and just kind of look. If we were trading this live and we were rejecting right off of the very level I warned you guys about, and it started to come down, well, the first aggressive trade would be the trade off the FMA, testing that little swing right there where there's a nice alignment between the FMA and the swing. Again, very short time frame, but that little swing, the FMA, and then as it came up to test into the FMA, again, it didn't go through by more than 2 points. It was like a little, maybe a 2-point push. You get this starting to happen, right? So if your eyes are attuned to looking for divergence, when we're coming up to test into the first, this is the most aggressive level you could have tried yesterday for the bears. Arguably, just shorting 59.95 might have worked for you, but I'm saying once we got this clue in the market, once we came into the very level we wanted the bears to hold, and we held and we started to break the first support, the FMA, and come down. Notice we bounced. There was a long right off the roadmap level, which was a counter trend type of thing, or a counter to our bias. But right there is your beautiful bearish divergence, and then we sell off. So that would have been the most aggressive thing you could have done. Okay. Now notice we came right into the next roadmap level here, bullish divergence, VWAP, and it started to actually hold to the tick. So there was actually again a counter trend type of bullish long off of the level to the tick. This happens all day long off the levels, but it didn't get very far. You actually might have gotten a 2-point scalp, and then it rolled over, right? So that probably wouldn't have worked out for you. You would have gotten filled on a 2-point scalp, which is why I always grab 2 points now, because a majority of my trades will at least give me that. But then it would have came back and you would have been stopped with the rest of your position. Now, the next most aggressive thing you could have done here to jump on that bearish side, especially noticing that we had started to duck through the VWAP there, was again off the FMA, where we had another peak above the swing here with a nice clear bearish divergence. So again, these are aggressive trades. I'm not saying that I'm going to take these every time, but that is, again, shorting the FMA, not even seeing the divergence or even noticing the divergence from that previous swing on the first test. You're taking on, again, maybe a point of risk, 1.5 of risk, and then you got yourself a nice 5-point pullback. Of course, it almost came back, and then you got the rest hopefully off down here. Now you can see where I got in, and this is just absolute picture perfect textbook stuff that I teach every single day, and that is a retracement back into the 200 moving average and seeing a divergence off of that as we're testing it, right? This is very, I talk about this setup every day pretty much. You got the crossover. We're starting to go in the direction of that bearish perspective we had, holding the very level we needed to hold. And then we come back up, come back to the mean, test the 200. And as we're testing, you can see there's the peak above and there's the divergence. So I waited for that. Now I didn't have to. I could have shorted the level blindly at 79.25. We did have a bunch of divergence. Like if we've been pushing much lower here, RVI was pushing all the way up, right? At least from this previous swing back here. So there was arguably divergence, but I'd like to have that local divergence right there. And you can see I then got in at 79.25 and got a pretty sweet trade with no risk, right? I mean, quite literally, as it pulled back from that swing, I got filled. Maybe it went against me by a tick, and then I got a full, beautiful trade out, never came back. So that would have been probably the best trade you could have taken yesterday. Luckily, I went ahead and put the trade on, right? Because a lot of times I'll see something like that and just kind of question myself and then watch it transpire exactly how I expected to. But luckily, I went ahead and did what I was supposed to do, which is follow my trade plan, put the trade on in the direction of what I was expecting with the signal, with the freaking textbook setup, and then from there you got the sell-off. So in my opinion, the best trade you could have taken yesterday was getting short right there. You had the VWAP, you had the 200, you had the divergence, you had a pretty much textbook 38% retracement of the leg, and you were even testing right into the previous swing right there. So everything was lining up, and that's what you got. Now, on the way down, if you missed that short opportunity, if you missed the short from here, if you missed the very aggressive short out of the open or the short off the 95 level, you then got a whole bunch of opportunities here on the way down, right? You've got the back end of Hopal. As we get through it, right? We bounced from Hopal, then we came back in, got through it, came right to the back end of it. Huge bearish divergence there. Look at that extreme push up on the RVI. Fail off of it to the tick. So another to the tick opportunity, very similar to right here in terms of the risk. And then you got the next meltdown from there, where you then could have gotten aggressive trying to short the FMA. That would have worked. It would have worked here. But more importantly, this retracement back to the back end of the previous daily close. More so, it looks like they retested that little swing and failed just in front of the level. So I might have not been filled waiting for the test. Oh no, I just deleted that. Waiting for the test right up into 58. So might have not gotten a fill, but it did test the swing there. And then again, all these opportunities are basically within a point or two of risk. And then they fell all the way down and they come right up to the back end of the next roadmap level where we had support and the back end of the 200. And you can see I went ahead and got in on that second little test there as the divergences continued to form because we had a double top and a very clear bearish divergence there as that was testing there. So again, I took a little bit of risk. He very well could have just popped through and came back to the previous daily close. But I saw the pattern. I saw how strong things were to the downside. I saw we were testing 57.50 or 59.50 half there pretty much perfectly. And I went ahead and activated the trade and got a decent scalp. Definitely got my 5 points out, but then it came through, so I didn't get the rest of my trade. And notice what happened. It did come right back to the previous daily close, which was kind of what I was concerned about when I got short. And then eventually, after a little bit of sideways action, this is again the first pop and sideways situation that we were in before we failed off VWAP. We then get that pop. So I just wanted to show you guys some of the really good short opportunities we had in the direction of our bias yesterday in the first hour or two of the open there. Now, again, did it go sideways for a bit and chop around? Yes, but despite that, again, failing off the previous daily close, bouncing off that roadmap level almost perfectly, getting up to the next area, failing off VWAP with bearish divergence, bouncing almost to the tick off 50 half there. There's 50 half again, the level I shorted earlier. Again, beautiful long. And then we fell from 50% the day before. You see, I tried a long here, which at the time I actually told myself, don't trade over here. Don't trade over here. And sure enough, I got long. So here's a great example of a pullback into a previous swing, lining up with the 200 moving average. And as they were pulling back into the 200 here, I noticed that I saw some potential bullish divergence. See this push right to the level? See the potential divergence that was there at the moment. So I thought it was a good little trade, but I did kind of question if it was a good point to be jumping in the market. And sure enough, it went through. Now, it could have worked out perfectly, but that one didn't. And then again, it just chopped for a while. Still holding, again, a lot of these trade setups perfectly. And then eventually, again, we get the hold off the VWAP. They just cannot get through. The bulls do not get through. These are all clues to you if you're trading in real time that, well, seems like the bulls are having a whole lot of time getting through VWAP here. So might be a clue for lower prices. right? And then again, they don't make it easy. It wasn't a straight line once they fell off VWAP. They had to keep coming back, faking everybody out. Again, still, if you zoom out, that 59.50 half, my friends, or 50.75, how many times did we come right to it and rotate off of it for the bearish side and the bullish side here? Almost every time we came into it, right? So great opportunities from there. And then finally, we get the continuation to the downside. And oh my Lord, had I have been here at the charts testing the back end of 25 half right there, a bunch of bearish divergence in a very, very extreme sell-off. Great opportunity right there to the tick, right? And even bounced right off that 15 half level as we were selling off tens and tens of points. Where'd they come to? Oh, what do you know? The roadmap level. Jumps up. Oh, what do you know? Rejects off the roadmap level. Even earlier, all the way down, bam, right to the roadmap level, and then rejects off the FMA. So again, just great stuff. And then, as you can see towards the end of the day here, there's that trade I just mentioned. That would have been great. And then we come down, and what do you know? It bounces to the tick off the next roadmap level at 58.98. And we begin a little bit of a sideways market, coming up to fail to the tick off of 59.25 half with bearish divergence. And notice that this 59.07 level becomes the next beautiful support area for bouncing, and 59.15 half becomes a nice intermediary level where we reject off of it and bounce off of it all throughout the chop. Okay, so again, just beautiful opportunities all through the rest of the day, failing off the back end of the 58.98, bouncing near to the tick off 58.83, coming on down. I got a scalp off here later on in the day as we were testing into the next roadmap level. Again, great opportunity to see if this is going to be a next area for a bounce, just like it did here, and as all the examples we saw. I did get a scalp and then came back, and then as you can see, held the back end of the level I tried to get long off of, came down, and then Jesus Christ, eventually here we get to the end of the day, and you can see another picture perfect opportunity to short the back end of the 200 with a bearish divergence on the double top. There's the back end of the next roadmap level, bearish divergence off the back end of the roadmap level with almost no risk for a continuation of the downside, bounce to the tick off the next roadmap level, and then we use it as a resistance there for the pullback to the FMA, and eventually come up, hold the back end of the 200 and the previous daily low, come down, and then eventually here we get a bounce at the end of the day, right? So just incredible opportunities. If you got chopped up in the sideways chop during the around the lunch hour towards the 1 and 2 p.m., you had all these opportunities to then get short later on in the day or get long off these roadmap levels with almost perfect bounces to the tick. And then that brings us here now into the overnight session where, and again, on the way up, my friends, pull back into the 200 here, pull back into the roadmap level and the 200 here, breaks out, pulls back to the next roadmap level and the FMA here for the long, and then right at the end of the day, we get through 58.67 half and then come back, and it becomes a support for 3 tests to the tick for the bounce to the next roadmap level at the end of the day, right? And then you can see here last night, pretty choppy market, pulls back to the roadmap level, holds. Just incredible price action, if you ask me. And so let's go ahead and get close to the open. And you can see right now, we were in a continued sell-off. The high of the overnight session was our roadmap level, and the low of the overnight session is now our roadmap level. Beautiful long that I actually considered putting a long on as I was doing my pre-market stuff this morning. And now you can see trying to hold above the low of yesterday. So let's go ahead and jump up to the higher time frames. We have about a minute or two to talk about what's going on, but I think it's pretty clear. So let's bring this in. And